Hello, everyone, and welcome to Total Alignment Charitable. Today, we are going to be sharing a little bit about our organization, as well as give you some information about how to choose the right financial professionals. Good afternoon, good morning, good evening, wherever you are. My name is Mina Black. I am one of the co-executive directors here at Total Alignment Charitable. I'm here with my colleague. You want to introduce yourself?
Hi everyone, my name is Christina Massale. I'm also one of the co-executive directors for Total Alignment Charitable.
Awesome. So today we're going to talk to you a little bit about how to choose the right financial professionals. Thank you for taking the time out of your busy day and spending a little bit of your time with us. We're going to hopefully share some information about the various types of financial professionals that you can hire and what you need to look for when you're thinking about hiring one of these professionals. Before we get started, we wanted to share a little bit about our organization. We are a nonprofit, and the work that we do, our work here is to help empower individuals to feel better about their finances, also to provide them free financial plans via our certified financial volunteer financial planners. We work with organizations, we partner with organizations to provide free personal finance workshops. And our goal here is to not just empower individuals, but also to help you move the chess pieces along and to help you get closer to your goals. So today, as we mentioned, we're going to talk to you a little bit about how to choose financial professionals. I'm going to go ahead and share my screen, and we're going to kick off today's webinar and get started. Hopefully, you're able to see my screen. If you are not, let me know. We are going to go ahead and get started. All right. All right. So, see, sure. All right. Hopefully, you can see my screen. So, how do you choose the right financial professionals? This is something that often comes up as we think about our financial lives. There are so many moving pieces and so many moving parts to our financial lives. It can be very difficult to determine what the landscape looks like when you are ready to hire somebody to help you maneuver and manage your finances. So what we're going to do is we're going to talk about how to understand the person, who it is that you're hiring. Also, most importantly, how is it that they're paid to ensure that you're making the best decision for you. So hopefully, my slides will move along. So why does this matter? I mean, sense does it make? What sense does it make to ensure that you're hiring the right person, right? So why does this even matter? Well, it matters to your money. It matters to your future. One of the problems that most of us face is that we hire financial professionals, but we don't know how they are paid. We don't know what their legal obligations are to us when we hire them. And lastly, we often don't know where to go to actually verify their credentials. And this can cost us thousands of dollars over the course of our lifetime in hidden fees. And it can also cost us thousands of dollars. It can cost us in poor advice over the course of our lifetime. So, our goal here today is to help provide you just a little bit of information about the various types of financial professionals you can hire, as well as also what you need to look for when you are hiring these individuals. Now, something to be very mindful about is when you are considering hiring any of the individuals, professionals that we talk about today, make sure that you are hiring the person for the stage of life that you are in. And what we mean by that is make sure that you are hiring them to align with where you are. That doesn't mean that you can't hire somebody who's going to help you grow, right, and help you get to where you want to be. What I mean by that is you want to hire somebody that understands your current situation, your current lifestyle, the current decisions that you want to work on, and they can actually work with you over the long haul. So make sure that the persons that you interview, the persons that you're considering hiring, really work with you and they're there to grow with you. Now, some of the things that you need to think about is when it comes to the financial professional landscape, there are different responsibilities that these financial professionals have. Right, so let's talk about a few of these responsibilities. One of the responsibilities that financial professionals have, depending on the professional, it really is something. It's something that we call fiduciary. So fiduciaries is really tied to the world of registered investment advisors. Fiduciaries are legally bound to act in your best interest. And if you take nothing away from today's presentation and today's talk, remember that phrase, in your best interest, because I'm sure you have found if you've ever hired anyone to help you with your finances, sometimes it may seem that the person that you're speaking to may not necessarily be acting in your best interest. But if the professional that you are considering hiring says, hey, I am here to serve you, I'm here to support you, and I am going to act as a fiduciary, you know that they're legally bound to act in your best interest. So just keep that phrase in your best interest. Remember the word fiduciary and keep that in your mind as you consider the various people that you hire, the various professionals that you want to hire. All right, so technology. Technology is always our friend. All right, now getting back to what we were discussing. So remember the phrase is in your best interest, and when it comes to individuals that are acting as your fiduciary. The second phrase, the second type of people that you may encounter as you work on hiring individuals is what are known as brokers. Now, brokers, they sell products. They sometimes work on commission. They receive a commission for working with you. And a broker, I'm going to see if I can just pin this a little bit. A broker is an individual, a broker is going to work with you to sell products that based on suitability. And what that means is that their goal is essentially their standard is not best interest. What their goal is to sell you products that are suitable, and their job is to not to make sure they don't have a conflict of interest. But it's not necessarily to act in your best interest. That's not to say that brokers don't act in your best interest, but they're not held to the same legal standard as fiduciaries. So you'll see if you're hiring somebody who's a financial professional, you can ask them, are you a fiduciary or are you a broker? And they will be able to tell you if they are one or the other. The next group of individuals that you may encounter are financial planners or wealth advisors. These individuals will provide comprehensive financial plans, and they can be fiduciaries or brokers. So that's something to keep in mind as you determine what type of individual, what type of professional you want to work with. The thing about financial planners and wealth advisors is now, while they do provide comprehensive financial plans, and we're going to talk a little bit more about what financial plans are and what is entailed in a financial plan, right? While these individuals can provide you a comprehensive financial plan, these individuals also can manage your assets. They can help you with your investments, right? They can also help you with your investments. And again, they can be fiduciaries or brokers. So just keep that in mind, meaning that they can act in your best interest or they can essentially be held to the standard of just suitability, right? Now, the other group of individuals, financial professionals you may encounter are the insurance agents. The insurance agents, they sell insurance products such as annuities, life insurance. They often work on commission. So note that if you are sent to a firm, if you end up working with a firm that is primarily known for providing insurance products, you may encounter the person. The person may say, "Okay, I'm a financial planner, I'm a CFP," but know that oftentimes, more often than not, that they are probably working on commission. So just keep that in mind if you go to a firm and what the planner, excuse me, not the planner, but what the financial professional is known for is primarily selling insurance products. Just keep that in mind. The key takeaway here is if somebody uses the term, I'm a financial advisor, it's a really generic term, and you must ask the person exactly how is it they are paid, and also what standard are they held to, because it varies depending on it varies depending on whether or not they're a fiduciary, they're a broker, or they are somebody who's here to sell you insurance products. So just keep that in mind that if somebody says, "Oh, I'm a financial advisor," the term is broad and there isn't really a specific definition for them, right? Next up is actually, let's switch gears and talk about the types of individuals that you may encounter. The type of individuals that you may encounter when you're ready to hire somebody to help you with your finances. We're going to talk about these individuals. Now, all these individuals that we're going to talk about, these professionals that we're going to speak about, they don't all do the same thing, and they don't all have the same expertise as a specialty. So keep that in mind as we walk through some of these specialties, excuse me, these professionals, and as you determine, okay, which one do I need and which one do I need now? Because it really depends on what you need for your personal life right now, and where perhaps there's a life event that has come up that you may want to hire somebody that fits into one of these models. So that being said, let's start off with this CFP. This is almost like the gold standard when it comes to financial for financial professionals, especially when it comes to either wealth management or financial planning. So the CFP stands for Certified Financial Planners. This is the gold standard for comprehensive planning. And what do we mean by comprehensive planning? These individuals will work with you to create a holistic financial plan. And the plan will cover many parts of your life. So let's say you need help with understanding tax planning. CFP can work with you to create a financial plan, a comprehensive financial plan that will cover that. If you need insurance planning, the CFP will help you with that. If you need investment planning, the CFP can help you with that. If you need, you know what, I need cash flow management. I need to, if you have dependents and you want to work on college planning, retirement planning, there are so many different risk management. There's so many different categories and topics that a holistic plan covers that a CFP will work with you to create. And their whole job is to, again, the CFPs, their whole job is, again, remember that phrase, fiduciary. Their whole job is to act as a fiduciary, to act in your best interest when they provide you financial advice. Now, earlier, you may remember, I mentioned that some individuals will be fiduciaries, but they also will also manage your assets, right? Can help manage your investments as well. So just keep that in mind that the CFP kind of is a one-stop shop for a lot of people. The person can help you not only create a financial plan that you can use, that roadmap you can use to reach your financial goals and reach whatever financial goals you have, but they can also help you manage the assets that you have. Next, a question that often comes up is, okay, now that I know what this person does, what is it how is it that they're paid? Oftentimes, they are what's called fee only. And you'll see this when you are evaluating and reviewing a financial plan. One of the questions you need to ask them is, are you a fee only financial planner? Are you an hourly financial planner? Do you charge a flat fee or do you charge a percentage of assets? Sometimes some planners, they'll say, okay, I'm a fee only planner, right? And you pay that fee and that's it. Some planners will say, okay, here's your flat fee. But also, if I manage your assets, meaning that if you have investment accounts, if you have retirement accounts that you bring to them for them to manage and help you manage and grow that account, they may charge you a percentage of that balance, your account value, your portfolio value, so that you essentially kill two birds with one stone with the CFP, right? That being said, some are fee-based as well, and some can earn commissions. So it's not at all financial planners that are only fee only or flat fee. Notice some can earn commissions depending on where you go and depending on what structure they set up. So these are some of the questions that you want to ask when you are interviewing the financial planner, especially if the person says they are a CFP. You want to ask them, are you fee only? Are you fee based? Are you hourly? Do you charge commission? Do you charge a percentage of my assets? You want to ask all of these questions and then choose the one that best aligns with what your goals are and most importantly, what your budget can handle, right? So the next question that comes up is, okay, now that I know what a CFP does and I know what standards they're held to and how much and how they're paid, when am I supposed to hire one? When am I supposed to get one? Well, remember, a CFP provides a holistic financial plan. So they essentially work like as a quarterback to help you manage and help you with your finances. When do you need one? I often say the best time to work with a CFP, to work with a financial planner, is when you ask yourself, okay, you know what? I need to get a big picture look at my finances. And for some people, they may say, well, don't I have to have millions of dollars or have a lot of money to work with a CFP and a financial planner? And the answer is absolutely not. The answer is absolutely not. It's if you find yourself getting a little overwhelmed and your financial life is getting a bit complex, this is where a CFP can come in really handy and work with you to really take it one step at a time and look at each part of your financial life to help you understand how to manage each part of your financial life and also make sense of each part of your financial life. I always like to say CFPs and financial planners, our jobs are to help you put the financial pieces together, right? And to help you create that roadmap of, okay, you know what, maybe you have a vision of where it is you want to retire. Maybe you want to go retire on the beaches of Costa Rica or something. I don't know, right? But figure out if what it is, where it is that you want to go. The CFP's job is to help you essentially get from that point A to point B to essentially help make that road a little bit more smooth and also a bit more clear, right? And try to help you understand what challenges and obstacles may be in the way and how we can essentially overcome them, right? So that's what a CFP is. Next up is the individuals. So now that let's say you've created a holistic financial plan. Now, the next thing we're going to really look at is, okay, one of the biggest things that comes up for most of us is our taxes. How do we manage and deal with our taxes? Taxes can be overwhelming, especially the older you get and the more complex your financial life becomes. So this is where a CPA, a certified public accountant, comes in handy. The CPA job is essentially they are your tax strategy partner. What they do is they go beyond just basic filing. Because I'm sure you know with your taxes, you could certainly do it yourself, right? You could file it yourself. There are a number of platforms that and services and companies that will allow you to do it yourself, right? And there are a number of companies that you can even hire a professional, a tax professional, to file the taxes for you, right? But if you want to really get beyond just basic filing and really work toward understanding, okay, my situation's getting a little bit more complex. So how do I make sure that I am minimizing my liability and minimizing the amount of taxes so that I can, if I ever I'm audited, I can deal with the IRS audits and if I want to start a business, the CPA can help me and really advise me on the business structure and where my business headed. That's what a CPA's job is to help you think long term and think strategically about your taxes and how to minimize your liability and also how to grow your wealth over time. That being said, they're held to a strict ethical standards by the state board. So if anything comes up, you can certainly make sure that you reach out to the state board regarding anything that may not be aligned with their ethical standards that they are held to. Now, they are different from CFPs. Remember how I said the CFPs, their job is to provide you a holistic financial plan. CFPs look back at what you has happened last year and look for tax savings. CFPs plan for your overall wealth strategy. Now, that being said, there are some CPAs, right, that look back at your tax, what happened last year. But those CPAs that look back at what happened last year, I like to call them the historians, the tax historians. But there are also some CPAs that are also tax strategists, and I call them tax futurists. Their job is to not just to help you look back at what happened last year. What they do is they help you think and look toward the future and figure out, okay, how do I make sure that I'm making the most of my current tax situation, right? And that's what a great CPA will help you do. And you meet with them not just during the tax season, you meet with them over the course of the year. Now, when do you need one? You need one if you own a business and you have complex investments or you own significant taxes. A great CPA can help you manage and maneuver some of these things and also help you handle any encounters that may come up that you may have with the IRS. So a great CPA is not just somebody who's going to just do your taxes. Their job is to help you really think strategically about your taxes so that you can minimize your liability and also think long term about how your overall financial health is looking. All right. So it looks like we don't have any questions, but let's go ahead and move on to the next category of individuals. The next category of financial professionals that we're really going to look at are known as estate planners. So we've covered the general overall financial quarterback for just the CFPs. We've covered the the professionals that will help you with your taxes. Great. Now, what about the individuals that will help you with your legacy? This is where the estate planners come into play. Estate planners help you protect what you build, right? They help you protect what you build. So what they can do is to help you create legal structures to ensure that your assets go to this says right people, but go to the people that you want your assets to go to with minimal taxes and as little, hopefully, with no court involvement at all. That's what estate planners do, right? So what they can help you do is create certain legal documents such as wills, living trust, power of attorney documents, and healthcare directives. So I'm going to pause here and stop here for a second and just share with you, okay, what are these documents? These are the legal documents. For example, a will is a document that will allow you the opportunity to essentially dictate how you want your property to be handled after you are gone, right? And sometimes it's not just your property. Sometimes if you have dependents, if you have dependents or children, you can even indicate within your will who the guardian, you can add a guardianship clause and add and put in the will who the guardian should be of for the children if you have dependents, right? The living trust allows you to protect the assets that you have while you are still here, while you're still here, and you can identify individuals, trustees that will essentially help you oversee the assets that you have while you are here. Power of attorneys, you can identify individuals to help you and to help you manage your affairs in the event you become incapacitated. So you have a financial power of attorney, a healthcare power of attorney. These are individuals that can help you in the event that you become incapacitated, or in some certain instances, it's not just incapacitation. You are unable to provide instructions or directives to your financial professionals. As a financial advisor years ago, one of the things I used to do when a client was headed out of the country and they had some instructions for us in terms of they wanted to get certain trades placed while they were out of the country and they were not going to be near they were not going to have access to a phone, or they're going to be kind of in remote areas, as some of our clients used to do, which is they go to remote parts of the world. One of the things they would do is they would actually just say, hey, I have my financial power of attorney here. This is the person that I want you to call um, if you need additional instructions. So it's not just in the event of incapacitation, it is also in the event that you just are unable to provide the directives yourself, right? And then obviously we have the healthcare directives that, again, if you are incapacitated or you are unable to care for yourself, these directives, the healthcare directives, identifies an agent, identifies individuals that will serve, that will help make sure that your wishes are met in the event something is not going accordingly. So that the estate planners can help you create all of these documents. These are the people that really their job is to help you create and set up these documents so that you can protect what you've built. You worked hard to build something, so why not protect it with the help of the estate planners? Now, a common misconception I think most people have is, well, I don't have an estate, so I don't need one. Well, if you have kids, house, or savings, you need an estate plan. You need an estate plan, and oftentimes we think again it's only for something that the wealthy need, but that is inaccurate. If you have kids, you should have an estate plan. If you have a house, you should have an estate plan. If you have savings, even if it's $1, you should have an estate plan. The goal here is to um, don't hire the estate planner when okay, I've amassed X amount of dollars. I'm going to wait until then before I hire an estate planner. No, start now where you are so that essentially you can have the estate planner also grow with you because life happens. Um, I'm sure Christina can tell you there have been instances as advisors that we've encountered whereby somebody may have created an estate plan. They may have created a will, or unfortunately, they either something happened to them and they didn't update the will accordingly, and their assets, their property went to a beneficiary, maybe it's a former spouse that they did not intend their assets to go to. So just keep that in mind that you want to have somebody there that's really actively working with you as your life changes and as things as your life evolves over time. So just keep that in mind. So estate planners are usually attorneys that specialize in estate law. They often work alongside the CFP and the CPA to kind of give you almost, in some instances, these places called family offices, but you can essentially create your own mini family office with the CFP, the CPA, and the estate planner. And they often work in tandem to make sure that your entire financial life is taken care of. So just keep that in mind. So that is what estate planners do. And then next up, the next category of individuals we have is tax attorneys. So this is the tax attorneys are the ones that you go to when the stakes are really, really high. And what we mean by that is usually they are hourly rate and flat fee for specific legal services, but it's usually for people that have complex legal side of taxes. What we mean by that is, let's say you owe the IRS a little bit of money, then a tax attorney can help you really determine the best strategy and the best steps to actually manage that, right? If you need to show up in front of the IRS, that's what the tax attorney is for, right? Or in tax court, that's what the tax attorney is for. How are they different from CPAs? While a CPA focuses primarily on the numbers and filing, a tax attorney focuses on the law and litigation. So a tax attorney can really help you understand, okay, how do I not just make most of my tax situation, but also what are the legalities involved in my current tax situation, so that I can make sure that I'm not running afoul of any afoul of the IRS. Now, when do you need one? If you're facing a serious IRS audit or criminal tax investigation. You owe, when I mentioned previously, if you owe just a little bit of the money, but you owe massive amounts of back taxes, or you're executing a highly complex, multi-million dollar business transaction. This is when a tax attorney really comes in handy, because they're used to working with complex situations and working to help you maneuver complex situations. And they can work in tandem, just like the CFPs and CPAs and estate planners. All of these individuals can work together to manage your financial lives. So tax attorneys really can come in handy. As you grow, meaning that as your financial life evolves, the tax attorney can work with you along the way. So how are these individuals paid? Again, I mentioned they're usually hourly rate or flat fee for very specific legal services. So if you need them to represent you in tax court, they may give you a fee for that service. If you need them to go before the IRS, they may provide you a fee for that service. Or if you just need them to review and help you come up with a strategic plan to pay back your taxes, to pay off your back taxes, they can give you a quote for that as well. So when you are determining whether or not to hire a tax attorney, excuse me for one, when you're determining whether or not to hire a tax attorney, one of the things that you want to do is you want to ask yourself, okay, does my situation currently warrant me working with a tax attorney? Well, if you have back taxes, if you need to go before the IRS, if you need to go to tax court, if you have a complex tax situation, if you own a business, and you may have a really big transaction coming up, then a tax attorney may be the best first place for you to first step for you, so that you can make sure that you know exactly what is expected of you in that particular circumstance, right? All right, let's see. We don't have any questions. Okay. Next up is one of the last groups of individuals, professionals that we're going to talk about, which is the insurance agents. Now, insurance agents, their job is essentially protection versus sales. It can be a little hard to find an insurance agent that really may be meet may meet the fiduciary, that may an insurance agent that's also a fiduciary, but they are out there. So, and what I mean by that is the ones that are like CFPs as well. They help you not just buy an insurance policy, but they help you with your overall financial life. So what do? They sell products to protect you against risk. So if you need life insurance, if you need health insurance, if you need disability insurance, home insurance, auto, really, this is where the insurance agent comes in. Their job is to help you essentially protect against loss in any of these categories. Now, there is something called a captive versus independent agents, and this is something you need to be mindful of. So, a captive person works for one company, example, State Farm, and they can only sell that company's products. So, just keep that in mind when you are evaluating evaluating insurance agents. Is, do I want somebody who's captive, and if they work at this one company and they can only sell me this company's products, or do I want somebody who's independent and their job is they can essentially go out to quote unquote to the street, go out to the market, and really get you the best bang for your buck. They work with multiple companies to find you the best rate, and they're not necessarily beholden to one entity. So just determine what works best for you. Perhaps you may say, okay, why would I even choose to go with captive if I can choose an independent? Well, sometimes it's the fees may be a little difference there, but also maybe your family has a history of working with one particular company and you really like that company. You really like that insurance carrier, right? So that being said, you just find an insurance carrier that's a captive agent with that particular company and you call it a day, right? So just keep that in mind. There are some scenarios where it may make sense for you to work with a captive agent versus an independent agent. Now, both of these types of individuals, these types of professionals, they are paid almost exclusively by commissions from the products they sell you. So keep that in mind. Again, go back to the suitability and fiduciary and these phrases. And are they working in your best interest? Well, you ask yourself, okay, oftentimes when we are looking at insurance agents, ask them, okay, you know what? Thank you for providing these quotes for me. Which carriers did you look at when you were evaluating these quotes? And really, can you, if you don't understand their commission structure, ask, because really, if they're, transparency, full transparency, they'll tell you, okay, this is how I am getting paid based off of this transaction. So just make sure, if you're uncomfortable, if you're just unclear, ask the question and they will tell you exactly how they are getting paid, right? Now, some dangers that some of us encounter when we speak to certain agents is, unfortunately, sometimes they recommend very expensive, complex products that, like, example, whole life insurance or annuities or universal, or these products that, for some people, they don't necessarily understand, meaning that the products may not necessarily um, be the best, make the most sense for that individual, right? Sometimes they'll offer a cheaper product. They'll offer you, excuse me, that a more expensive product, but a cheaper product like a term policy would have served you better. But if you know, you may know that, oh, that person may not be recommending a term policy, because with a whole life policy, they're going to get paid, they being the agent, will get paid more if they recommend a whole life policy versus a term life policy. So just keep that in mind, that before you even go to these agents, you might want to become a little well versed in the different types of policies that are out there. And you can do a quick search on the internet to find out, okay, how would an agent be paid if I'm, especially if you're looking for life insurance, how is an agent paid if I buy a term policy? How is an agent paid if I buy a whole life policy? If I buy a universal policy, like, just do some basic research on your end to understand how agents are paid, and most importantly, what the differences are between those type of policies before you go in and speak to the agent. Now, we're talking about agents here, insurance agents. Something to be very, very mindful about. There's insurance agents, but there's also a group of individuals that are called insurance planners. And these are the ones that, as your financial life gets more complex, just as you might want to go to a tax attorney as your financial life gets more complex, you may want to go to an insurance planner instead of an agent as your financial life gets more complex. The planners, what they do is they kind of take a really long view of your life, and they don't just look at, okay, I'm going to sell you this life policy, I'm going to just sell you this health policy. What they do is they really take a holistic look at your life, and they determine, okay, what policies can we really put together? What plans can we put together? What strategic plan can we really put together to grow your wealth? And that's like a great insurance planner will really work with you to really figure out, okay, have you heard of this policy? Maybe it's a cash flow banking policy, right? Oh, can we build this trust so that we can use it to grow the wealth of the family, right? And it's not just, oh, here's a policy and here you go. They are really all about, insurance planners are really about, okay, how do we take a holistic look at your financial life so that we are not just looking at this one policy, but we're looking at, okay, how do we actually grow your wealth, and how do we use insurance as a wealth building tool, right? Without it being overly cumbersome or overly expensive. So just keep that in mind, that yes, you can go to an insurance agent, but as your financial life continues and evolves, an insurance planner may come in. All right. So, last but not least, I said last but not least, is the robo-advisors. So the robo-advisors, these are, I would say, fairly new. And when I say fairly new, I'm referring to just within the past decade or so. Some of these robo-advisors have come into play. Robo-advisors, they provide you with the ability for for you to receive automated investing. So previously, if you don't know, when you wanted to buy stocks in the olden days, you used to have to call up a stockbroker and they, hey, blah, 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 I want to buy this stock. And the stockbroker would go ahead and place the trade for you, right? You give them your trade and they place the trade for you. Over time, that has evolved into, well, you still call your stockbroker, but that's where the computer came to play. You worked with your advisor, you worked with your investment advisor, and they still placed the trade for you. So you had access to that individual, that person, right? Robo-advisors are a little different in that it's essentially a digital platform. So if you've heard of companies like Betterment, Wealthfront, right? Vanguard Digital. What the companies are is they're essentially a digital platform that uses algorithms to essentially create automated, diversified portfolios based on your risk tolerance and based on your goals. So these automated investing platforms, they allow you the ability to essentially, I wouldn't say set it and forget it, but they allow you the ability to be a little bit more hands off when it comes to managing your investments in particular. We're talking about investments here, right? So what that means is the standard that they have to adhere to, if they typically have to act as fiduciaries, right? The pros of working with a robo-advisor is they have extremely low fees um, compared to human advisors. Oftentimes the fees like 0.25% or between 0.25% and 0.40%, right? It's automatic rebalancing, and they often do tax loss harvesting. Um, and they have very low minimums to start investing. Right. The cons of actually investing through a robo-advisor platform is that you don't actually get a human to talk you off the ledge when the market crashes and you're like, sell, sell, sell. And you feel like selling everything in your portfolio. You don't get a human to actually work with you on that. So, and if you have a complex tax, if you want a complex tax strategy, it's automated. So it's not really appealing to that crowd. It is appealing to maybe you're like, you know what, I don't want to get too bogged down in the minutia of picking investments by one. I don't necessarily need a human to be involved in this. Then a robo-advisor may be the best bet for you, where everything is automated and maybe you can even set it so that every month you put money into that account and and they just continue to grow your money that way being speaking with a without you speaking with a human. So a robo-advisors is one way to think about it. And then we have our friends. This is a kind of a different financial professional, and what I mean by that is these financial professionals are the financial coaches. They're more so focused on behavior change over investment strategy. So what they do is they focus on the day-to-day money management, the fundamentals of personal finance, how to budget, how to get out of debt, how to improve your relationship with money. Now, the challenge with the financial coaches is it's an unregulated, it's completely unregulated. Anyone can call themselves a financial excuse me, a financial coach. Anyone, right, can call themselves a financial coach, and they're usually paid. You can pay them an hourly rate, or they will say, okay, pay me X amount, a flat fee for a coaching package, right? They're very different from CFPs, and that coaches focus on behavior change and cash flow, whereas CFPs focus on long-term wealth management, investing, and long-term planning. So think of it like, okay, you need something short-term, daily cash flow, budgeting, all of that. Okay, that's where a financial coach comes into play. If your situation is not complex, a financial coach may be the best bet for you. But if you need somebody to help you think long-term about wealth strategy, wealth management, then this is where a financial planner, a CFP, if there's a CFPs, can be really beneficial to you, right? So when would you hire a financial coach? Well, if you're struggling to stick to a budget, you're drowning in high interest debt, you want somebody to help you really take accountability and be your accountability partner to change your money habits, then this is where a coach can come into play. So remember I said that sometimes they're paid hourly or flat fees. Sometimes they also sell you digital products, like they may sell you a course to help you learn how to budget. They may sell you a course, or like maybe they'll sell you an Excel spreadsheet so you can use to pay off your debt. So just keep that in mind as you determine what's the best way for you to reach best way to reach your goals, right? So that being said, how do we choose which professional. So we have all of these professionals, and I know it's a lot of information, and it can be a lot to take in and figure, okay, what do I do? Who do I choose? And hopefully you've learned a little bit about what each professional does, how they get paid, and some of the questions you should ask them when you meet with them, you are interviewing. Remember, your life events, your current life events, your current lifestyle is what really dictates who you should choose. That being said, let's go over some of these, just kind of run through some of these professionals again, and you can determine the ideal scenario to use these, which ones makes the most sense for you. So let's start with the CFP, the planner, the financial planner. Are they fiduciary? Remember that term, fiduciary. Are they working in your best interest? Yes, that's what CFPs are, right? They are compensated fee only or fee based. And again, comprehensive financial planning, retirement planning strategy, looking at your overall financial health. They act as the quarterback to your financial strategy. Right? Help you create the financial strategy. The advisor, fiduciary, not necessarily, no, right? But they focus more so on suitability. Remember, their job is to make sure that when it comes to suitability, is make sure that the fees aren't excessive, and make sure that there is not a conflict of interest, but not necessarily acting quote unquote in your best interest. That's not to say that they'll not act in your best interest, but they're not held to the same legal standard as a fiduciary, right? And remember, they're compensated by commission. So sometimes if you need help with buying specific stocks or bonds or mutual funds, then a broker/advisor may be the best way for you to go. We have CPA listed here because they're that important. Your tax strategy is that important, but they are paid hourly fee, flat fee, fiduciary, yes. And again, they help you with your tax strategy, complex returns, business structure setup, audits. A CPA, certified public accountant, their job is to really help you think long term about your taxes. Now, the estate planner that we talked about, this is where the legal side comes into play. This is, okay, I need to protect my legacy. What do I need to put in place to protect my legacy? Well, they act as a fiduciary. They do charge you either an hourly rate or a flat fee, and they will help you create these documents like wills, trusts, power of attorneys, and just any asset protection document that you want to put into place to ensure that your legacy is protected. Next up, we have our tax attorneys that we talked about. These tax attorneys, again, they can act as a fiduciary. They have to act in your best interest. Same compensation structure, hourly slash flat fee. They can work with you to ensure that if you are having any challenges with IRS, they'll work with you for IRS disputes, tax litigation, complex business deals. And then we have our insurance agents. Remember, insurance agents, they don't have to act as fiduciaries, right? They don't even have to act as suitability doesn't really apply here. They will be paid a commission, but they can help you to get the insurance products that you need to protect your life, whether it's term policy, a whole life policy, disability policy, health policy, or home policy, or auto policy. Their role is to help you essentially protect against loss. And remember I said that there is agents and then there are planners. You want to see, as your life grows and as your life evolves, you want to get an agent, but you also want to get maybe get a planner instead of an agent over time, right? And then we have our robo-advisors. Our robo-advisors, fiduciary, yes, right? And how do they get paid? The percentage of the assets, they're compensated as percentage of your portfolio that you provide to them. You give them to manage. So often, remember I said the fees are low, 0.20% or up to 0.40%. It's very low. It is automated, low cost, great for beginners, as well as also advanced. One thing though, just keep in mind is remember, it's robo-advisor. You're not talking to a human, right? So it is automated and everything is essentially electronic and digital. And last, we have our financial coaches. Fiduciary, no. You are going to be compensating them hourly, either hourly or flat fee. And as I mentioned, sometimes you also have a digital product to sell to you, right? And they will work with you to manage your day-to-day finances, and they will work with you to work on creating a budget to help you pay off your debt, as well as also help you understand some changes in your behavior and how to reach your behavior. All right, I'm going to turn it over to my colleague Christina, and Christina is going to talk to you about a little bit about fiduciary versus suitability. Christina, I'm going to stop sharing my screen.
Yep, thank you. All right, so we're gonna pick up here. Hopefully everyone can see my screen. We're gonna pick up here. Thank you, Mina. We're picking up on fiduciary versus suitability standard and what this actually means. And so Mina already defined and gave the definition of what a fiduciary is and why it's important for you to ask some of these experts, right? What are we talking about? We're talking about you verifying essentially the experts that you're going to be using to make sure that they have the right credentials and experience and all of different things. So you have the definition of what a fiduciary does in terms of being legally required to act in your best interest at all times. But what does this all really mean? Um, as part of this fiduciary standard is a duty of care that is actually required to to be held with the client. There's conflicts of interest also have to be disclosed, right? Not just mentioned, but they have to be disclosed. Clients have to receive what's known as best execution in terms of pricing and things of that nature. There's a duty of loyalty. And this gets compared to the suitability standard, which when you think about the fiduciary standard is the highest level, right? Then there's something called the suitability standard. And FINRA stands for the Financial Industry Regulatory Authority, and essentially it promotes investor protection and market integrity. And it's a private organization. It's not non-governmental, so it's not a government organization like the SEC is. Um, but it does exist to provide some level of investor protection and market integrity. And so FINRA years ago came up with a suitability standard. It was the Suitability Rule 2111 that brokers had to adhere to. Now, under this rule, it's pretty loose in terms of that it whatever is recommended to a client, it just has to be suitable for their situation. So there's very limited questions that are asked. It could be, okay, well, what's your risk tolerance? What's your net worth? What's your age? There isn't a requirement for conflicts of interest to be disclosed, for instance. If there is a better, let's say, for instance, a financial product is recommended, and there are cheaper products that exist, that broker can recommend to you the more expensive product that pads their pockets because it is suitable for you, but it's not in your best interest, right? And that's what we mean by a fiduciary standard. What's in your best interest? So, a couple of years ago, another ruling came out called Reg BI. And so Reg BI is just an additional standard up from this suitability standard. So when you think of it in a tier structure, it's going to be the fiduciary standard, then Reg BI, and then the suitability standard. And so Reg BI takes the suitability standard up a notch because it actually requires the disclosure of conflicts. But a way to think about it that you can couch it is, okay, the suitability rule, the 2111, the FINRA rule will say, okay, all right, I made a dish for you or a meal for you, and it fits your diet, and I give you that meal as a client. Now, there's a whole menu of other dishes, but I'm just giving you a particular dish that may satisfy you, right? So that's suitable for you. Reg BI may say, okay, this dish, it's the best dish for you on the menu, considering these parameters, considering your nutritional requirements and considering your price, right? So that's one example of Reg BI. But then the fiduciary standard, if we use in the same example here, it's like, okay, I'm not only going to recommend you this dish on this menu, I'm going to recommend you what I would choose if I were in your exact situation. Your whole's looking at your entire situation, and that's the fiduciary standard. And if I myself was in that situation without any hidden incentives and everything disclosed, So you do want to ask the question in terms of where does the financial professional stand? Are they a fiduciary? I see a lot more commercials now where they're asking, got to be a CFP. That's the CFP board. That's their promotion about CFP. Or where clients are asking the professionals, are you a fiduciary? And then they're explaining. So we talked a bit about suitability and fiduciary standards. So, how are these financial professionals compensated? And there are several ways that people are compensated. So, I also am a financial planner and a wealth advisor. I get paid through fees. So, I get paid through an hourly fee, a flat fee, or a percentage of assets under management. No commissions are being charged. I'm not selling any product. So, I would fall in that first category of fee only. And generally, clients like this because it generally aligns with their interests in that there isn't any potential conflicts of interest, or I'm not offering them something just so that I'm getting paid on the back end. So that's think of that as fee only. Another type of way that someone could be compensated is commission based, right? So if I'm paid by commissions, then I'm working with third parties, right? And I'm selling their products. So I could be an insurance company. I'm selling insurance, right? Mina already talked about what it means to be captive versus independent. It could be I'm selling mutual funds, right? And I could have a lot of, there's a high potential for conflicts of interest here. And depending on that fiduciary standard, that suitability standard or Reg BI standard that's being used, it depends if these conflicts are even disclosed. So it's important to ask a lot of questions about what's being sold to you. Okay, do you also hold this fund? If someone's recommending a mutual fund to you, or how are you being paid from this company that you're offering this to me from? It's okay for you to ask those questions. Another way someone's paid, an advisor or financial professional, is let's call this the combo platter. So there's a mixture of fees as well as commissions. So they earn both. And here you want to be careful here because sometimes people can be dual-hatted in their roles and things like that. And so they may be getting paid a just a mix of both. Essentially, I can be a financial planner and I could sell life insurance, for instance, right? So I'm getting commissions on or I could be selling annuities, right, as well. And I'm also a investment advisor. And so you want to ask, how are you being paid? And it's not a bad question, and people have to be transparent with you. So conflicts of interest, what are these? So conflicts of interest arise and they exist anytime that there are any interest that's not aligned with your interest. So you have an agreement with an advisor, and let's say, for instance, an advisor is offering you a boatload of financial products, but then that advisor, it could be investments, private investments, let's say, and that investor has not disclosed to you that they have a 60% stake in this particular private investment. So there's an incentive there. They want to get more people maybe in that fund or in that particular investment, and that's something that should be disclosed, right? It could be in terms of commission-based pay can create hidden conflicts where the advisor's paycheck competes with your returns. So essentially, they're getting more money based on what they've recommended for you to do. So it's important to make sure that your interests are aligned and that their interests are aligned with yours. So there's some terms on this slide that people may not be aware of. So what is churning? So churning is known as excessive trading, excessive buying and selling of investments in a client's account. And so generally and historically, a lot like now you don't see as much commissions charged on trading and things like that. At least on retail accounts and things of that nature, competitors. A lot of many people have eliminated their fees, trading fees, but you can still see some advisors constantly selling, and every time you generate you make a transaction and you're selling, there's trading fees associated with those. And so who's getting paid? That person's getting paid. So there shouldn't be a bunch of unnecessary buying and selling of investments in an account. And also, it's not good for the client because there potentially could be a lot of taxation that gets triggered with the realization of these investments once you actually sell. Um, High fee products, and this goes back to that suitability standard versus fiduciary standard. Sometimes advisors can recommend products that are much more expensive because they pay a higher commission. So these may not be the best for you. Now there could be other no load funds, or meaning like those funds without an expense, without a high level of fee associated or expenses, or a much lower expense ratio associated with a financial product, and to yield the same exact result for the amount of risk that you want to take. So these are the things that a fiduciary would look at. And so when Mina talk about like captive versus independent, that's where proprietary funds comes in at. If someone's working for a firm and they're captive, they can only sell the proprietary funds that are owned by that brokerage, even if there are investment alternatives someplace else on the market where the expenses are lower. So there's a lot to consider, and in terms of if you want to work with somebody or hiring someone, but it also gives you a lot of questions that you can actually be armed with to ask about these things. So no questions so far, but there are questions, no questions on the chat so far for us, but there are questions that you need to ask before you actually are onboarded or sign on with anyone. And one of those questions are you a fiduciary 100% of the time? So this comes into play when people are multi-hatted or dual-hatted. So let's say, for instance, advisor A is actually advising some retirement plans, and they're under the ERISA fiduciary standard for that retirement plan for a 401k or an employer's retirement plan, or it could be a 403b. And then that advisor also is responsible for educating the employees or that that actually invest in that plan, and selling them on rollover IRAs and what they should invest in. And under that, that advisor may then be operating under a suitability standard or a Reg BI standard and not a fiduciary standard. So it's important to ask what role, what capacity, how many hats this advisor is wearing, whatever subject matter expert you have, because there's some people, as Mina mentioned, there's some people that will put themselves out as financial planners only, financial advisors only, investment managers only. And sometimes those terms encompasses it all. So you really have to ask the question, okay, like what exactly are you doing? What are your roles? When are you a fiduciary, et cetera, et cetera? How exactly are you compensated? So you want to ask for a breakdown of the fees, commissions, and hidden costs. So I've asked clients who are coming over from other advisors, and sometimes that's the way they come over because there's no transparency. They don't know what they've been charged. And then when tell them this is what you should get, and they obtain that information and they see it and they start to understand, they're out and they want to go someplace else, right? Um, so you want to make sure that that's part of, if you do have an advisor or you're working with someone, they should be going over your fees at least every year with you in your reviews and things of that nature. And you should understand exactly how you're being billed, all that you're being paid for, the products, how there's if there's any trails on things, other types of fees that come on later, what's your total all-in cost, administrative fees, like even for some of these exchange traded funds, these ETFs, these baskets of securities, what are the expense ratios on those? Because they're broad-based index funds, generally the expense ratios are lower, and this is one of the advantages of going into an exchange traded fund versus going in getting a mutual fund, which is going to be professionally managed, and therefore the fees are higher, but you need to know what your all-in costs are going to be because remember, all of these things, these costs reduce your overall returns. What are the qualifications and disciplinary history? So you want to verify their background. And so we're going to go on how you can actually verify their background in a little bit. One of the big things, this is huge, find out where your assets will be held. A friend of mine, smart man, literally mentioned that he had a friend that he trusted from like high school or college, and the friend had invested, was investing money for people. He was talking about all the returns that he was getting, and through a company that the friend purported that he had. And he ended up giving a little bit of his money to the friend, and then he started earning all these money. He was getting statements and all these other things. And he ended up then giving all of his money to this friend to manage. Lo and behold, the money was never written out. The check, the wire, however he put the money through, it never went to a third party custodian. It went to the name of that friend's firm. Huge red flag. Your money should always be going to a custodian. So what's the custodian? A custodian is a place like a Charles Schwab, a place like a Pershing, a place like a Fidelity. These are just a few names where they are known across the street as custodians that actually hold your money. But it should not go to the name of someone, Bob William. You should not be writing out a check to a person's name. You should not be writing out a check to a person's company. So be sure to ask all these questions about where your money will be held, etc. So we talked about different types of experts and financial professionals that you should verify. We talked about the fiduciary standard. We talked about the suitability standard. We talked about the importance of conflicts of interest being disclosed. We talked about questions that you should ask. Mina went through all of the chart with the details about, okay, these are the kind of like honing in on, these are the key takeaways from about each of the professionals, who's a fiduciary, who's not. Now we want to highlight to you some red flags because people will try to sell you on things. And there are some things that you need to watch out for from all of these professionals, right? If anyone is guaranteeing you returns, run. Run away. There's no way that returns can be guaranteed. Every single investment carries risk. When we walk out of our house every day, there's a risk. We don't know, you don't know what's gonna happen, right? Good or bad, right? But all investments carry a risk. So there's nobody that can guarantee you, oh, if you invest with me, we guarantee you 30% returns, right? That's impossible. Now it doesn't mean that their performance that they didn't generate alpha or they didn't generate their performance wasn't in excess of a benchmark like the S&P 500 for several years, and they can say, hey, these were our historical returns in the past. Now that's something that someone can point to, but no one can guarantee future returns, right? Um, if someone is not willing to explain to you how they're paid in a manner where you can understand it, yeah, that's not going to work for you. If they're highlighting that you feel pressured or pressed to make a quick decision, you don't have to adhere to that. If you don't understand anything that they're saying, the jargon, it's very complex. You don't want to buy something because everyone else is in it or fear of missing out or following, the herd mentality. So these are just some things to watch for when any financial professional is selling you anything. And one of the key thing is interview several people, interview at least 3 people and see, because you're gonna get different stories, you're gonna find out different things, you're gonna learn different things, and you'll be able to ask your questions, ask the same questions to each of them, see how the questions are answered, and then you can make a decision from there. So more homework for you. So we were talking about things that you should look out for red flags. You can also see some of the red flags. So when you go to verify licenses and credentials, there's going to be some things that you want to check for. So FINRA broker check, you can check for anybody who's listed as a broker. Let's say they have a Series 7 or other licenses and registrations that have come through that they've obtained through from FINRA, who actually sponsors a lot of these exams. It shows their employment history. It shows if there's any customer complaints. So it literally kind of has like a resume of, where you worked and things like that. And if there's anything egregious against the person, it'll be there. Okay. So on the SEC Investment Advisor public disclosure. So these are for like registered investment advisors who are registered with the SEC. You can also go in and check that RIA. You can check their firm that's listed. You can also check if an individual is listed as a registered a registered advisor as well with this with the SEC or the state. That person should be listed there. NASAA and state regulators. So this is every single level. So the SEC is going to be more at the federal government level, right? And then the North American Securities Administrators Association, which is the NASAA, this is more of a state security regulator, and essentially they exist for investor protection. And so they govern like a bunch of states and provinces, like it's over 60, but you can check state registered advisors and local disciplinary action there as well. So there's a host of places that you can go to verify licenses and credentials. If you want to check somebody's CFP qualifications, you can look it up on the CFP board. If you want to check someone's CPA qualifications, for instance, you can go to the NASB, which is the National Association of State Boards of Accountancy. So you can do that for CPAs as well. We already talked about for RIAs where you can go, they're registered usually with the SEC or the state. Um, CFAs, they have a CFA institute and board. So this is a chartered financial analyst. So if you're looking for somebody to give you specific stock plays or because they're deep into investing like particular investments and portfolio management, the CFA may be the place to go. But there's a lot of letters up here. We're talking about RIAs, registered investment advisors. We talked about CPAs earlier, CFPs, a whole host of things. I mentioned FINRA, I mentioned NASB. So the slide does highlight alphabet soup. So you don't, just because somebody puts um, AARP behind their name, that what does that mean, right? So you want to make sure that you know what these credentials mean. Definitely look them up. Do some research if you don't understand. And some credentials carry more weight than others. Some of them, there's an experience required in addition to exams and schooling, while some others you can actually take a course over a period of a week or so. And that not that that's bad, but you want to know in addition to what someone actually spent time, went to school with, and has experience with, what is their work experience? How long have they been working in that area, right? Not only how long have they been working in that area, what is their specialization? Because someone could work at a company that's a wealth management firm and do nothing that's related to maybe, that's related to portfolio management or investment management, right? What you're getting services in. So a lot of questions you want to ask and find out and look and see what these letters mean. Just checking to see if there's anything. Okay. So we mentioned checking for some of these disciplinary histories, but what are you actually looking for when you're going to check up on people and do some of your investigative work? You're looking to see if there's any customer complaints, if they've had any bankruptcies, if they've had any criminal charges, those things will be listed. If a regulator has asked them to cease using their credentials or their licenses. Now, I've seen with some lawyers, because I usually look up if I'm referring folks to people, other experts, I look them up still just to make sure to see where they are, even if I have a, good relationship with them. You just never know. And then someone, their license was temporarily suspended because they hadn't completed their like continuing education. So that was more procedural and administrative versus something that was technical. And then it was like you saw within a quick amount of time, it was actually rectified and restored. So you want to know what the reason is and things like that. But all that stuff was public and you could actually see it. Um, so FINRA broker check, we highlighted that. You can see where everything is, the investment advisor public disclosure, NASSA. So these are places where you can go, but what you're actually looking for is on the left-hand side. Like we said, highlighted customer complaints, regulatory actions, etc. And if you notice you're not comfortable with anything that you read, even if it's compliance related where they didn't adhere to meeting their continuing education. If you're not comfortable with that, move forward. There are other experts that you can actually work with, so you don't have to feel compelled to stay. And remember that, listen, you are in control. As a client, you're the pilot, so you're actually directing and guiding the plane. So you have the right to know and ask as many questions as you want, to know anything you want to know what you're paying. You want to make sure that everything you want to see is in writing, what your fee is, what you're paying, how the advisor is being paid, if there's any carve outs to your assignment, all that stuff should be in writing. And make sure you are comfortable before you sign anything. At the end of the day, you don't have, remember, you're the pilot, like you don't have to stay. You can always walk away. So who's your financial team? Um, what's a high level financial team? Mina mentioned the financial planner or the CFP pretty much operating as a quarterback on your team. So some CFPs, some financial planners are also investment managers, or some are also wealth advisors. So find out what exactly they're doing, if they're focused solely on financial planning, etc. But they may be creating your comprehensive plan and they may be also managing your investments, right? And still a fiduciary. You may want to have a accountant that's going to handle your tax strategy, your forward-looking tax strategy and your tax preparation, right? Not just the mere filing, looking backwards, but also looking forwards, right? Making sure that you are optimized from a tax perspective. And then estate planning attorney, right? Everyone has an estate, regardless. Everyone, even if you want to pass down some recipes, even if you don't have children, you still have assets and things of that nature. You may want to pass it down to other people in your family or to organizations. It's important for you to have the estate planning in place, right? In terms of, Mina went through all the documents and things like that. I won't highlight these again, but you want to have your financial team, right? And sometimes it can include others, like I said, because the financial planner may not be that investment person that you want, right? You may want somebody who's also a CFA on your team. So it's also dependent on what you're actually looking for. But overall, as you're going through and you're verifying these professionals, you want to make sure you ask all the questions that you want to know, and don't feel bad about it. Don't feel as if you have to go easy on the person. You want to ask anything that you want to know. You want to know if they're fiduciary 100% of the time and how they're paid. You want to verify, because this is what this whole session is about, verifying before you trust any professional. So there is homework on your part, right? And there's so many resources nowadays that makes it a lot easier with the tools that we provided you here in this session today, where you can look up everything before signing anything, right? You can look up the credentials, you can look up the experience and all of those different things. And you can also get a warm and fuzzy feeling from meeting with someone, whether that be on Zoom or in person. And like I said, try to interview three different people at least in the same line of work so that you can compare and contrast different things. Make sure conflicts are disclosed. And at the end of the day, don't be afraid to walk away. So you're the pilot, you're in charge, you're the client, and these professionals have to service you. So we don't want you to feel pressured to stay and do anything that you don't feel comfortable with. So those are some basic informations on how you can verify some of these financial professionals. And if you have any questions, you can always reach out to us at Total Alignment Charitable. We ask that you follow us on all of the social media platforms that you are interested in or the ones that you're signed up for. So we are on Instagram, we're on Facebook, we're on LinkedIn, we're on TikTok, we're on YouTube, and in all those locations, we are listed as Total Alignment Charitable. So we ask that you visit us there, check out any upcoming webinars and any other information. And we assign volunteer certified financial planners, so CFPs, are assigned to pro bono clients for free financial planning. So for individuals and families who meet our criteria, our verification criteria, um, you can actually sign up and scan the QR code if you meet the criteria. You'll go through the process where you'll be assigned a pro bono financial planner and you can get a free financial plan.
All
And
right.
these
Thank
people have
you.
already been vetted.
Awesome. Well, thank you everyone for joining us today for our webinar, our workshop on Trust But Verify, how to choose the right financial professionals. I want to thank my colleague, Christina. We hope to see you in the quote unquote virtual halls of Total Alignment Charitable. Hopefully you take advantage of our free financial plans and we will connect you to a certified financial planner so that you can work with them to get your financial house in order. And make sure that you use some of the things that we've talked about today to ask your financial professional, your financial planner, that we connect you with some of the questions that we've discussed today to ensure that we are doing right by you. If anything comes up, feel free to contact us at any of the channels that Christina shared, on any of the social media platforms that Christina shared. You can always visit our website at www.totalalignmentcharitable.org. And we hope to see you at our next workshop. All right. Have a good afternoon, morning, or evening, wherever you are. Talk to you soon. Bye bye.